unit. So by the end of this lesson, a learner should be able to, number one, understand special features of a consignment business. Two, you should also be able to analyze the differences between the two transactions, that is the sale and the consignment. Number three, you should be in a position to practice the accounting treatments for consignment transactions. And lastly, you should also learn the technique of computing the value of closing stock lying with the consignor. So those are some of the terms that will define the consignor, the consignment, the consignee. So you don't need to be worried about that. So that is our expectation, that by the time we are through with this unit today, we should be able to value the closing stock, which will be lying with the consignor. We should be able to practice all the accounting treatments for consignment transactions. And that is the most important aspect of this topic. Now, let us start by looking at the meaning of consignment. The meaning of consignment. Now, the act of consignment or consigning, it means to send. Consigning means to send. Consigning, maybe I can note it there so that you get to know what we are talking about. Consigning, it simply means to send. So consigning means to send. Means to send. Now, the word consigning is used in the context of goods, and therefore consigning simply means sending goods. And consignment, now the consignment refers to handing over of goods belonging to one person, handing over of goods belonging to one person to another person without transferring the ownership. So handing over of goods belonging to one person, handing over of goods belonging to one person to the other person without changing the ownership. Without changing the ownership. Now, when you are handing these goods, there are the other person on the other side that is also concerned. And now we have two people who are involved. The person who is handing over and the person to whom the goods are being handed over to. So we have two persons that are involved. Now, the people that are involved, the two persons, they undertake shipping or the transport of the goods. They can undertake shipping or transporting of the goods. So whichever the means that is involved, that will be left to the parties. Now, consignment, in simple words, means one person or a firm, so the firm of FIRM, to mean a company, so one person or a firm, sending goods to another person or a firm for selling them on behalf of the former. Selling them on behalf of the former. So the former is now the original owner of the goods. Remember that the owner of the goods only transfers possession. He only transfers possession of the goods, but retains the ownership over them. He only transfers possession, but retains the ownership over them. Now, the purpose of a consignment transaction is to facilitate the delivery or the transport of goods. It is simply to facilitate the delivery or the transport of goods. Now, the person who undertakes to keep and transport goods of others, the person who undertakes to keep and transport goods of others receives a commission. So he receives a commission. He receives commission. So that is his pay. Receives commission now for selling the goods on behalf of the owners. Now he has to take upon himself or herself the responsibilities and the risks associated with the control over the goods. So he has to take responsibilities and risks associated with control over the goods. So that is the payment for the person who will now undertake to receive, to transport and also to keep the goods on behalf of the others. Now, I want us next to look at now the parties to a consignment. Now, who are involved? Remember, we have talked of one person sending goods to the others, one person sending goods to the others, and the other person also receiving. So parties to consignment, parties to consignment. You have to forgive me about my handwriting today. This is not the way I write in the real. Parties to a consignment. Now, the first party is a consignor. So, number one, consignor. Now, the consignor, in some books, they refer to it also as the principal. 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 Now, the principal or the consignor is the party that seeks or that sells the goods and is also the actual owner of the goods, the actual owner of the goods. So he's called a consignor. Number two, we have a consignee. Consignee, again, a consignee is double E. Consignee is also referred to us in some books as the agent. The agent about that. The agent, so a consignee is also the agent, and the agent is the party that receives the goods. So he does not own the goods, but just keeps control over them. And as the name suggests, we have the consignor and the consignee. So they have a principal agent relationship. I believe that you have already covered financial management, and I know you had looked at the agency problem, the problem between the principal and their agents. So the consignor is the principal for the consignee, who becomes now his agent. So these are the two key parties that we have in a consignment kind of arrangement. Now, next we can look at the procedure of consignment. The procedure of consignment. So there are 4 steps that are involved in a consignment kind of relationship. The first step in the consignment happens when the consignor, it happens when the consignor and the consignee, so the principal and the agent, it happens when the consignor and the consignee enter into an agreement of consignment. Enter into an agreement of consignment. Now, the consignee agrees to accept possession of goods from the consignor, and they also agree upon the terms of their agreement. They also agree upon the terms of their agreement and the commission payable in this step. So in the first case, they agree on the terms and the condition. That is step 1. Now, after they have agreed on the terms and even the commission, now the next step is that the consignor now hands over the possession of goods. So step 2, the consignor hands over the possession of goods to the consignee along with a pro forma invoice. He hands over the possession of goods to the consignee along with a pro forma invoice. And the pro forma invoice is simply a document that contains details about the goods transferred. Remember that the consignor is only transferring the possession of the goods. The consignor is only transferring the possession, but not the ownership. So the ownership still lies with the consignor. So that is step 2. Step 3, now the consignee will now undertake the transport. The consignee will now undertake the transport and the sale of these goods under his custody. So generally, he is supposed to bear all the expenses of transport and the sale. And he will recover all these expenses from the consignor later. Now, at this step 3, the parties are free to change the terms. They are free to change the terms now regarding the expenses if need arises. So remember the terms agreed upon in step 1, they are not fixed terms. So they can be changed if a need arises. Now, finally, the 4th step is that now the consignee sends a statement called account sales. Consignee sends a statement called account sales. It is called account sales. So that is the last step. Step 4, account sales to the consignor. Now, this is a document which simply contains details like the sales made by the consignee, the expenses he has incurred or she has incurred, and the commission that is payable to him. So that is what is contained in account sales. So we have said, 1, it contains expenses. Put them down. The expenses now that the consignee has incurred, and 2, it also entails the sales that the consignee has made, and lastly 3, the commission. So we'll come to commission. So those are the 3 items that are always included in the account sales: expenses, the sales, and then we also have the commission. Now, I want us to now look at the differences between now a sale and a consignment. So the normal sale and the consignment. If we have any differences. Now you realize that a consignment transaction, they might seem to be similar to a sale, but there are some grounds in which the two are different. So that is what I want us to look at, the differences between the consignment and the sale. So we can have a table. So on this end, we have consignment. Consignment, and then on the other end, we have now the sale. So this can give us a picture of now how the two are different, now the consignment and the sales. So the first ground is on the ownership. Now in a consignment, the ownership of goods remains with the consignor. So the ownership of the goods remains with the consignor until the consignee sells them to a third party. So in the consignment, now ownership remains with consignor. Ownership remains with consignor. Ownership remains with the consignor until now the consignee makes the sale to a third party. Now in a sale, now for the sale, the ownership of goods are transferred from the buyer to the seller immediately after the sale. So the ownership transferred from the buyer to the seller. So immediately the sale is done, the ownership changes from the buyer to the seller. Buyer to the seller. So that is the first ground in which now the consignment and the sale are different. Number two is that the consignor and the consignee, they have a principal agent relationship. The consignor and the consignee have a principal agent relationship. But now for the sale, on the other end, the buyer and the seller have a creditor-debtor relationship. They have a creditor-debtor relationship. That is the second ground in which the consignment and the sale are different. Next, number three, on the consignment, the third ground is that the consignee can return all unsold goods to the consignor. Now for the consignment, the consignee can return all unsold goods to the consignor. But now in a sale, the ownership gets transferred upon the sale. The ownership gets transferred upon the sale. So the buyer cannot return the goods unless the seller agrees. The buyer cannot return the goods unless the seller agrees. So that is the third ground. The fourth and the last ground on the consignment is that the expenses incurred by the consignee, are borne by the consignor. So the spelling is borne, B-O-R-N-E. The expenses incurred by the consignor, by the consignee are borne by the consignor unless they agree otherwise. So it means that any expense that the consignee will incur, he will transfer all of them now to the consignor unless there is an agreement otherwise. But now for the sale, the goods, once sold, the goods once sold become the buyer's responsibility. They become the buyer's responsibility, and the seller is not responsible for any other expenses. The seller is not responsible for any other expenses. So those are the four grounds in which now a consignment and a sale are different. Unless there is any question up to that point. So if there is a question, you can unmute your microphone, or you can write the question on the public chat so that I'm able to respond to it. So I'm waiting for question. Okay, in point number two, for the consignment, we are saying that the consignor and the consignee have got a principle. They have got a principle. Let me just write. They have got a principle agent relationship. Principal agent relationship. So the relationship is that of the principal and the agent. But now for the sale, the buyer and the seller, they have got what we call a creditor debtor relationship. Now, what we mean by the principal agent is that, remember the principal here is the consignor. The consignor is the principal, and the agent is the consignee. We have said that the principal transfers the possession of goods to the agent. So the agent is only helping him or her to sell his or her goods. But the ownership still lies with the principal. So the agent is only acting on behalf of the consignor, who is the principal. Now, in the case of a buyer and a seller, there is no principal agent relationship. So the relationship that is there is that of a creditor and a debtor, that if I sell to you goods, then you are supposed to pay for them. So you are my debtor and I am your creditor. That is the relationship that exists between them. Then on point number 3, Kelvin Masharia has asked about point number 3. Now, for point number 3, if I use point number 2 to explain 3, remember that the agent does not take ownership. He's only possessing them. He's only acting as a go-between, or as a broker to help the principal to sell the goods. So any goods that are not sold, maybe by the end of a particular period of time, because of one reason or the other, then the agent will send them back to the owner. But now in the buyer-seller relationship or creditor-debtor relationship, the ownership of the goods are transferred immediately upon the sale. Even if you have not, the payment has not been received, the ownership will be transferred to the seller. The seller will transfer ownership to the buyer. So unless there is any agreement that maybe if there is some defects that are identified by the buyer between a particular period of time, then now the buyer can take the goods back to the seller. And if there is no such an arrangement, then the seller cannot send back, the buyer cannot send back goods to the seller. Remember the receipts that we usually get in Kenya. In our receipt, there is always a disclosure that goods once sold are not returnable. So to mean that the buyer will take any liability so long as you have stepped outside the seller's premises with the goods, then you cannot return them back. Then somebody has asked about point number 4, that is Joram. Point number 4, we have said that in a consignment kind of arrangement, then the expenses incurred by the consignee, any expense that the agent will incur will be transferred to the principal. So the principal pays for all the expenses. But now for the arrangement between now the buyer and the seller for the sale, now the goods once sold, they become the buyer's responsibility. So again, you cannot expect that the seller takes the responsibility for such goods. And then we have, okay, on Koba has already answered Wanjiku. Wanjiku, you are saying the ownership, it is from the buyer to the seller. No, in a sale, in a sale kind of arrangement, what I said is that the ownership of the goods now changes from the seller to the buyer. The ownership changes from the seller to the buyer immediately after the sale. But remember, in a consignment, we have said that the consignor transfers possession to the agent. The consignor transfers possession to the agent and not the ownership. The ownership will change if now the agent sells the goods now to the buyer. Now in a consignment kind of arrangement, if the agent sells the goods to the buyer, then now the ownership will change from the consignor, who is the principal, now to the buyer of the consignment goods, and not in the case of the sale. I hope I'm clear there. So now that there is no any other question, I want us now to move to the accounting treatments. The accounting treatments in a consignment, or simply the accounting treatment in the books of consignor. Accounting treatment in the books of the consignor. Now remember, we have said that the relationship between the consignor and the consignee is that of the principal and the agent. So the entire profit or loss belongs to the consignor, who is now the principal. The consignee receives the commission as his remuneration. He receives the commission as his remuneration. So only the commission is received. Now, on the consignment of the goods, the consignor also sends a pro forma invoice. Now, when the consignee remits money, he sends account sale, and we have already talked about account sale, to the consignor. So the entries that are expected in the books of the consignor, one, we must prepare the journal entries. We must prepare the journal entries. Now, from your accounting one, I believe you know what the journal entries are. So maybe just a template to show what we are talking about. Now, Joram is asking, in a consignment agreement, who determines the price of the product? Now, the owner determines the price. And the owner now, in our case, is the consignor. The owner is the consignor. So, to move back here, we have the date for our journal. Just a template. Then we have particulars or the details. About 10. So we have particulars in our second column. Then in the third column now we have the two amounts. We have the debit and the credit. So remember, the amounts are in shillings. Eh? Okay. Okay. So that is an example of our the journal that we'll be preparing. Now, in the first case, we have a case where the consignor is sending goods to the consignee. So number one is the entry for sending goods. So entry for sending goods. So you in the date here, you can have the date. And then after the date down, maybe if it is 21st like today, so you can have 21st of May. Then we have now entry for sending goods. Entry for sending goods. That's the illustration. Entry for sending goods. Now, when the consignor is sending goods to the consignee, now the entry that we will make is that now we will debit the consignment account. We will debit the consignment account. So we'll have here particulars, consignment account. Consignment, not consignee, and so consignment account. We debit with now the cost of the goods, and at the same time, we credit goods sent on consignment account. So we credit goods sent on consignment. goods sent on consignment account. Goods sent on consignment account, so we credit that. So that is the first entry that we will make. That is the first entry that we'll make. Now, that entry, you can put in bracket down there that being goods sent on the consignment basis. Being goods sent on the consignment basis. So remember, we have said that to record the entry for sending goods, one, we debit the consignment account, and two, we credit the goods sent on consignment account. And the reason for doing that, you can note that it is to represent the goods that are sent on the consignment basis. So that is the first entry. Entry number 2 is entry for consignors expenses. Entry for consignors expenses. Consignors expenses. Entry for consignors expenses. Now, if a consignor, who is now the owner of the goods, incur any expense, then one, we debit consignment account with that amount. We debit consignment account with that amount, and at the same time credit cash or bank, depending on whether the money was paid in cash or was paid through the bank. So one, we debit consignment account, and two, we credit cash or the bank. And the reason for doing that is that now that represent now the expenses for the consignment. It represents the expenses for consignment. So that is the second entry. The third entry is for consignees expenses. Now remember, we have said that all the expenses that will be incurred by the consignee, all those expenses are borne by the consignor. So the consignor will pay for every expense that the consignee will incur. So the entry for consignees expenses, so if there are any expenses incurred by consignee, one, we debit the consignment account. We debit the consignment account, and two, we credit consignee account. We credit consignee account. So we debit the consignment account and credit consignee account, and that being expenses for consignment by consignee. Expenses for consignment by the consignee. So that is the third entry that you'll make in the journal. The fourth entry is for advance given by the consignee. Advance given by the consignee. Entry for advance given by the consignee. So if there is any advance that is given, then one, we debit cash or bank. We debit cash or bank by the amount. So depending whether the payment is received in cash or through the bank. And then we credit the consignee account. We credit the consignee account. So debit cash or bank account and credit the consignee account. And that is being receipt of advance, being receipt of advance. Remember, this is a payment that maybe the consignor is making to the consignee, any advance payment that the consignor is making to the consignee. The fifth entry is for sales. The fifth entry is for sales. Now, if there is any sales by the consignee, then now the accounting entry to make is one, we debit consignee account. We debit consignee account. And at the same time, we credit consignment account. We debit consignee account and credit the consignment account. Now the amount will be now the amount from the sales. And the reason for doing that is that is to recognize the sale of goods, or just you simply know that being sale of goods, being sale of goods. The other entry, number 6, is the entry for commission. Remember, we said that the consignee is being paid a commission, is being paid a commission based on now the sale that he or she has made. So we have entry for commission. So if there is any commission to be paid to the consignee, one, we debit consignment account. We debit consignment account. And two, we credit consignee account. We credit consignee account. And the reason is that being commission recorded, being commission recorded, being commission recorded. Number 7 is the entry for collection from debtors. Remember, the consignee may be selling some goods on credit, so the payments are expected at a later date. So in such a case, if there is any collection from the debtors, then there will be no entry to be recorded. There will be no entry to be recorded from the collection from the debtors. Number 8, so I'm very clear there. If there is entry from collection from debtors, please do not make any entry. That is specifically for consignment kind of business. Number 8 is the entry for bad debts. Entry for bad debts. Now, the commission that is paid to the consignee, we refer to it as maybe I can write it there so that you see it. It is a bit complicated to pronounce. You can write it there. That commission is, let me try to write it well in quotes. Maybe somebody can mute his microphone and read it for us. Yes, that is how it is written. Commission that is paid to the consignor. So we are saying that in number 8 is when we have the entry for bad debts, when we have the entry for bad debts. And for the entry for bad debts, we have two cases. The first case is if we have the presence of this. Then I think it is a French word. Then cre something. Yes. So in the first case is if we have this kind of a commission, then there will be no entry. There will be no entry for bad debts. So there will be no entry for bad debts if we have that commission. The second case is in the absence of this commission here. In the absence of this commission, so if there is no arrangement for this commission, then the entry for bad debts will be treated as follows. Number 1, you debit consignment account. You debit consignment account. You debit the consignment account, and at the same time, now we credit consignee account. Credit consignee account. So that is in the absence of the Dell press something commission. So we debit the consignment and we credit. Sorry, we debit the consignment and we credit the consignee. Sorry. Credit the consignee account. So that is the entry that we will make for bad debts. And the reason for doing that is that you just not being bad debts recorded, being bad debts recorded. For you can just write in brackets bad debts recorded. Number 9, we have the entry for the final profit. The entry for the final profit. So if there is any profit, then 1, you debit the consignment account, and 2, you credit the profit and loss account. So you debit the consignment account and credit the profit and loss account. And that is being the transfer of profit to P and L. The transfer of profit to P and L. Then the second last entry is entry for final remittance. Final remittance. So if you pay the consignee's amount, 1, you will debit the bank account. You debit the bank account or cash, and then you credit consignee account, and that is being payment to consignee. Being payment to consignee. And then the last one, the entry for balance in the goods sent account. Remember, when the consignor is sending the goods, he expects that all of them will be sold. But that may not be a reality. In some instances, you will find that only a part of the goods have been sold and some part have not been sold. So if there is any balance of goods that are sent to the consignee, then the accounting entry to be made is, number 1, you debit the goods sent consignment account, the goods sent consignment account. You debit it with the cost of those goods that have not been sold. And then we credit trading account with the same. We credit the trading account with the same. And the reason is that that will signify the balance of goods that are transferred to the trading account. So being the balance of goods transferred to the trading account. Now, lastly, the closing stock. The closing stock, the entry for the closing stock. So if there is any goods in the closing stock, we debit the consignment stock account. We debit the consignment stock account, and then we credit consignment account. We debit the consignment stock account and credit the consignment account. And that is being the entry for the closing stock transferred. So I want to believe that to illustrate more on these entries, I think we can look at an example of which I want to post in our discussion forum, and then now we will guide each other well from the forum on how to prepare the journal entries for the remaining period of time. I've seen we have taken almost 1 hour in the explanations. So I want us to move to our discussion forum so that we show how to prepare these accounts. Please, I expect that everyone will participate on the discussion forum. And remember that I'll also be recording the session in the discussion forum. So we look at an example from the forum and we see how we can go about it and prepare all the accounts that we have said. So I'll also post now the processes that we have looked at now, the journal entries to be made, so that they can guide you in each of the processes that we are going to do. So please, can we switch now to our discussion forum so that we get to understand now